Hello, everyone.
Hello.
Hi, welcome to this webinar on what makes a startup investable. I am Ridha, working behind the scenes with Maxtron to elevate PitchMatter's presence. PitchMatter's purpose is to empower founders to be investor ready. I am pleased to host today's session, which brings together perspectives from across the ecosystem. We are delighted to welcome Kalp Bhatt, a partner at Atharva Consultants. Kalp brings over 10.5 years of leadership experience in incubation. Hi, Kalp.
Hi Ridha and hello everyone.
So Kalp has been also, investing in ventures and ecosystem building. He has been like building a lot of ecosystems. He has led four premium technology business incubators, and recently completed the venture investing accelerator program at IIMA Ventures with a strong background in innovation, entrepreneurship, and venture capital. Kalp also continue to shape and support the startups across India. On the other hand, we have Rohit Bafna. Hi, Rohit.
Hi, Ridha. Hi, Kalp.
So Rohit is a founder and CEO of Triple Eight VC and a very good friend of ours. As our speaker for, and he's a speaker obviously for this event. Rohit has also shaped his journey across organizations like Mumbai Angels, Nine Unicorn, and Expert Dojo in the US, drawing from over 10 years of venture capital experience. He also holds master's degree in global finance from Fordham University, New York. His platform Triple Eight VC is a cross-border VC active across the US, UAE, and India, and has bagged more than 50 startups. Rohit is also an active angel investor since 2017 in sectors such as AI, deep tech, sustainability, and more. Now, I think I should hand over the mic to Kalp. Over to you, Kalp.
Hey, thank you Ridha. And it's great to interact with like-minded people and discuss how the ecosystem is going. So hello everyone and welcome to this very good webinar. So right away, thank you so much Rohit for joining in today. And like all the first-time founders and anyone who starts a company, they always have this question in their heart that what makes a startup investable, what are those things that a startup founder should take care of, and how they should prepare to seek good investments from VCs like Triple Eight VC and Rohit. So if you can share some light on that, that would be great for us. Over to you.
Sure. Great. Thank you overall, Maxtron and Kalp, to invite me to this webinar. It's an honor to be in this session. First of all, I can give you our thesis of investment and how do we invest. So, ours is a SEBI Category 1 AIF in India. We are a venture capital registered here, and we typically invest in B2B startups like AI, deep tech, sustainability. So far, whatever startup investments we have done, we typically like to come in pre-seed to seed stage, and at an average check size of 250,000 to $500,000. We are majorly like co-investors or co-lead with the institutional VCs. The way it works is we have a team partners, we have an assessing authority whereby a lot of startups apply to us for investments. We look at various parameters to invest, which also includes the problem statement, I would say, to start with, the market in which you are tapping up to, the scalability. I think obvious question as the scalability, right? And of course, the founding team and the USP and how different you are. So, but we are more like tech oriented or tech focused fund. So we have majorly invested in technology startups, which we believe that which can scale outside India. And recently, we have started doing manufacturing, defense, deep tech, aerospace, but our major of our portfolio is AI or SaaS, like enterprise AI or SaaS, right? If you have any specific questions, I can also answer as to the process of investments, and also the your question related to what makes a startup investable. I think it's a broader question. I think if you can ask me more deeper question, I can also answer on point by point basis. Yeah. Yeah. Kalp, do you want to?
Yeah,
Yeah.
sorry, I was lagging there for a bit. So, as you rightly mentioned, thank you for those insights. But the first question that I have is, how do you balance the early stage ideas with team strength? Because when you are creating a startup, that is something that, the founders are very conscious about. So, how would you suggest, like, how is it relevant with the team strength part?
Of course, team strength and first few employees are very crucial to assess any startup opportunity, especially the team, what value they bring in. Because first few employees are the key growth driving factors, I would say. And these days, it is very important uh, to founders to have a co founder. That is also a very important criteria these days, because it's not that what value a single founded startup can bring in. It's about what values or what benefits the other co-founder can bring in. For example, if any founder who's able to focus more on the sales and marketing, then the other co-founder should be from the tech background or the AI background. So what value benefit can the team can bring in? And the other hand, in order to scale, in order to achieve that momentum, in order to, because running a startup is like a roller coaster ride. So team is very very important. In fact, even if it's a failed entrepreneur, we would have invested in a failed entrepreneur, because a failed founder would know the things which not to do as compared to a regular founder, right? So team strength is very important, and of course their background experience in their previous domain. As to, let's say, if somebody was a product head at some particular tech startup and now he's launching a new product, or for example somebody was leading the operations in a consumer startup and now he's launching his own consumer tech startup. So that experience also matters a lot, that what experience you had in the domain expertise in the past experience. And of course serial entrepreneurs are very much preferred in investment world. That is my liking, of course. And as I said, the first few employees, the people who bring more value in the early stage, it is very important, right?
Can you share an example where the team dynamics would have affected your investment decisions? As to that could be a major factor when an investor puts some money in a startup.
Actually, it happened with the, we were about to write a check to a AI company which was into industrial automation and coming from a new IIT. I would not name the IIT or the company. But when we spoke to the founder, he said he has a co-founder and he has an experienced team and he's launched the platform. But when we went to figure out and we were doing the due diligence, we could find out that he was using his interns from the IIT to get the IIT incubation check. And those interns were literally in like their third or second year of their college. So that was a sort of a red flag for us, because if your team is not full time, if you are hiring interns to get things done, and if you claim an intern to be a co-founder, that was, so I think that was one of the classic case. We were about to write a check but we stopped to write because we like the product, we like the tech, and it was little early also in terms of scalability. And then the team dynamics plays a very crucial role, that is very important.
Right. And this is where the things happen at a very nascent stage or early stage. But how does like the dynamic between an investor and founder evolve over a time? That how that dynamic changes and how that kind of strengthens the bond between these two entities.
Got it. No, of course, your question was majorly the dynamics between investor and the founder, right? I think the first investor should be chosen very wisely, I would say. So, a founder or a startup should definitely do a research on the first investor as to how collaborative is the first investor, because it will shape up your all future rounds. Because let's say if you end up giving too many rights to the first investor, or reserve matters, or every approval is required from the investor, how supportive is the first investor, that is very important. So that dynamics shapes up the future rounds. So first few investors are very important for future rounds, and in fact, to help the company grow and scale, these days, what value you bring apart from investing, that is also very important. So apart from that, I would also say that the matchmaking between investor and founder should be done. So most of the founders, what they do is they reach out to any VC without knowing the fact, without knowing the thesis, without knowing what stage they enter in. So a proper research about the investor should be done before approaching any VC, I would say.
All right. So I would now ask Ridha if she can ask any question regarding to this, because she also has a different kind of a perspective being working in one of the eminent companies. So Ridha, over to you, and let's understand what you want to learn.
Yes, I mean, thank you so much, Kalp. So, Rohit, like, I want to understand basically how does, like, founder and investor contribution evolve over the time, like, with changing like, with a lot of changes within the industry, and, like, with the dynamics, which, like, obviously the world has for this, like, new AI thing coming in. How do you see, like, the collaboration between founder and investor, evolve?
Definitely, times have changed. Earlier, it used to be only writing a bigger check and working with the founder. These days, even investors talk about GTM as to how much business you can bring apart from investing.
Yeah.
In fact, there are bigger tier one funds who have launched their programs in order to train the founders. For example, Axel, they launched the Atoms program in Bangalore, if you're familiar with.
Yeah.
They take AI founders to the Axel Atoms and they give them a lot of perks like delegation, or helping them with the US GTM, or working with the UAE market. That is very, very important. So these days, the dynamics have changed. It is not only the $1 million check, it is also what value, what ecosystem. In fact, there are a lot of micro VCs which are coming into picture. We are also a micro VC. A micro VC is also very, very important and crucial these days, because sometimes tier one or tier two VCs, they want to take time to invest in any opportunity, to observe them, to get the traction. So micro VCs and early stage investors are playing very crucial role in order to bring that startup, like idea stage startup, to a mature seed stage startup. So
Absolutely.
we've even invested, like I can give you an example. We invested in this company called Sustaining AI Eco Ratings. We were literally idea check investor. Now after a year, they are able to launch their AI, and they map the ESG score for enterprise clients, and they even assess the ESG score. They work with enterprises like a B2B enterprise AI company. So now their AI, generative AI, is live, and they have clients and they have customers. We've given them GTM contracts. We've got them multiple benefits, and now the company is doing really well. So it depends how founder alignment with the first investor, how much you believe the founder, and how much founder is also eager to work with the investor. Because sometimes founders only chase the check.
Yeah.
They do not use the resources of the investor which we can bring in. A
Absolutely.
founder has to ask a helping hand, and the other hand, the investor also has to work on the portfolio development. Because sometimes I see a lot of VCs, they invest and they forget, They don't even know what is happening to their portfolios.
Yeah.
So portfolio uh, development is very very important, and knowing the progress of the investment. So getting quarterly calls, working with their requirement, even hiring requirement for the matter of fact, I've helped founders even hire their crucial employees, because even if after they get the money from the VC, how do they manage the money and how do they get the right talent and use the AI tools? That is also very important.
Absolutely. Completely agree. Yeah, I
All
think.
right.
Yeah.
Yeah, yeah. So I think Rohit has addressed the founder's perspective, and what actually the VCs look for when they are willing to invest in a company. So Rohit, I would like to do a kind of a rapid fire with you, where there are a few jargons that usually first time founders would listen to or hear to. So I'll just ask you, what those jargons mean for you as a VC, right? So the first jargon that I would ask is the problem solution fit. Now, what does a problem solution fit mean to you as a VC?
Uh, I would say that sometimes there are a lot of startups which build the product, but they don't even know whether that problem exists or not. So a problem should be identified whereby we need to assess whether there is a demand and whether there is a problem which actually exists for that particular solution or not. What we do is we create solutions and we go in the market and start selling. And by not knowing whether that problem exists or not, or whether there are tons of products already there in the market solving that problem. So but then I've seen startups who co-build the product and make it more product market fit according to the requirement of the clients. So they co-build according to the client requirement. And those kind of startups work practically, get few clients. They just develop like one layer or MVP or first stage of the product. But they develop more, what do you call, features of the product when they know that this product will be sellable and there will be a repeat rate for the customer and there will be more retention. So product market fit is very very important. So I understand getting product market fit is very challenging and it takes a lot of ups and downs, roller coasters. But I think co-building, working with the incubators, working with the corporate venture capital arms these days, if you are into B2B, when it comes to brand, I think I've burned my hands in consumer brands as an investor. So I would say consumer brands, they need a right set of team, a right set of path and a strategy, and a very growth mindset, that not replicating and coming up with a unique product and proposition in D2C that will work. But I am more like a B2B investor more, so I can answer more from the perspective of B2B tech or enterprise or AI or deep tech from that perspective. Yeah.
Understood. So, the next rapid fire question is, what do you mean by scalable business model? As you know, we hear a lot that for any startup to reach to a certain level, they keep on pivoting. But what does actually a scalable business model mean?
I think for scalable business model is the day when you get your growth path, like month on month growth or year on year growth, is improving and showing that there are no the repeat rate. There are more and more customers liking your product, and you are able to scale at a particular level. For example, we are investing in this EV refurbish kind of startup. At first time they converted 20 original vehicles into EV. Now they're doing 100. So we see the growth, so that the number of customers are increasing, the number of sales is increasing, month on month growth, year on year growth, repeat rate, intention. There are a lot of parameters and factors and ratios. But yeah, scale according to me is business. How much you are able to increase your revenue. In the end, that's what matters. So figuring out a way to increase your revenue streams and figuring out a repeat rate and customer, that is very important to reach that path, even if at a particular point of time when they have achieved a product market fit and they know in order to scale it they need more marketing. But if you know that this product is already scalable and doing very well, then you may achieve a stage whereby you're more bootstrapped and you don't need more funding. You're already able to scale that product.
Okay. Now comes the most important question that is usually asked by the VCs, that is called the traction. How much is the market size? How much traction do you have? Or, that is where actually the entire game changes for people to actually, kind of get the funding. So, what does market size and traction mean to you, and how does it affect your investment decisions?
Depends which sector, I would say. For example, we recently saw one consumer fitness brand, and she was able to achieve what 25 lakhs monthly revenue in the span of 6 months. So uh, depends which scale, which industry. But yeah, so your question was majorly related to traction, right? How do you assess the traction,
Correct,
right?
correct.
So we now more invest in startups which have uh, at least um, I would say the contracts, the LOIs, the order books in place, and we know that whether they'll be able to fulfill those order books. So that is, we call it as a seed stage, whereby they have some traction, some growth, some LOIs, order books, which proves the revenue stream. And also the other thing is the customers which they are working with. What is that retention ratio, and all these factors, right? So I think if you give me a particular case, then I'll be able to answer very precisely. But depends what kind of industry and what kind of startup traction. We have invested in pre-revenue startup also, because we knew that this market is good and he'll be able to gain that traction, and he has order books in hand and he needs money to fulfill those order books. So that proof of revenue or path to profitability, a path to revenue, should be very very much feasible. It should be visible.
Understood. So, on that note, I would just like to ask the last question. That how do you define that whether a startup or a founder has that competitive edge, or are they risk averse, or would they be able to adapt as per the needs of the market? So how do you gauge that? How you get a sense of that? That this is the dark horse I should bet upon.
Definitely very interesting question. I think this question is more related to moat, right? What's your moat, right? So moat usually depends on, again, sometimes first mover advantage, sometimes one particular feature which is different from other, which nobody else is able to do, or nobody is able to launch that particular piece. Or let's say if you got patent on a particular tech which gives you a certain processes or certain design or certain thing which is helping you scale. These are certain modes or competitive features that keeps you separate, that make sure your IP is secured and you're able to scale your business based on that IP. Coming on different sectors, if you ask me on consumer, it depends which particular city or target market you are tapping and how much fast you're able to fulfill those orders. So it depends which sector, which industry, again. But I would say moat is very important, product market fit, and understanding the first mover advantage, that defines a lot of competition these days. So, and also it depends upon, for example, if you're talking about generative AI or enterprise AI or deep tech, uh, there are startups which are able to achieve the mode, but they don't know whether this product can scale in India. So they also have to identify which market is feasible for them to achieve that competition level.
Understood. Yeah, thanks, Rohit. That was very enlightening. And I'm seeing that we are being bombarded by a lot of
Yeah, I
questions
could
in
see that
the
there's so many
Yes.
questions. Yeah.
So, without further ado, over to you, Rida, and please take it ahead with Rohit.
Yeah. So, Rohit, like I have only one question because like I actually enjoyed a lot and I got a lot of great information from you, which is like really valuable, honestly. So like my one question to you will be like, how to access, like startups in frontier sectors with limited benchmarks. I mean, what are your thoughts on that?
How to access startups from frontier tech? That's what you're asking.
Sectors, yeah.
Okay, like how
Very
to
limited.
source the startups.
Yeah.
Okay, so sourcing, I think it comes from. Are you asking how do we source our startups, or you want to source startups for your investment purposes?
So I mean, any like founder, any like yeah, any founder, if they want to know how, like, what will be your suggestions on that?
Okay, I didn't get the question. If you can repeat, for a founder to assess what?
So basically, like how to assess startups. I mean, for example, if any like founder wants to know from an investor perspective, then what will be your thoughts on that?
Okay, like what are the parameters of an investor to source a deal when
Yes,
whether they like that startup or not?
yes,
Okay.
absolutely.
So for that, what we have done is we kept various parameters. Okay, we have created a. We started with a Google form whereby we asked founder to fill up those 30 questions. Um, Many a times, startups don't feel like filling up those Google forms in those VC websites. But actually, it's very good process to assess those deals because a we get some ready-made information which we want to know before we want to take the deal ahead or not.
Yeah,
For example, some VCs like to come at a particular thesis whereby they've kept a benchmark on valuations. Now, let's say if you say I have a 10 million or a 20 million valuation, you may not attract a micro VC who wants to enter at a seed stage at a 5 to 10 million kind of a valuation at a 1 or 2 million round. Okay. So these are some benchmarks which you have to see and research about a VC before applying it to that VC. For example, if you're putting a 500K check, like a 4.5 crore check, we expect that at least we take equity of 2 to 5%. Okay.
okay.
Now, startup comes with different ideas and different valuation parameters. They say we have a product, we have competition, nobody is able to do. They have created their own valuation benchmarks. They have created their own traction and resources, but it does not fit our thesis because we don't want to go beyond 10 million valuation, or
Okay.
we don't want to invest in a startup which is very repeatable, or we would have invested in a similar company, right? So every fund has a thesis which you have to research upon. What
Understood.
valuation, what check size, whether I want to lead the round, whether I want to co-invest,
Mm,
whether we invest in loss-making startups or not. Do we need profitability? Do we invest in B2B? All these parameters, all these questions are very important when they answer. And then let's say you don't have a co-founder. It's sometimes many VCs I've seen they say no if you don't have a co-founder.
yeah,
So these are very very crucial requirements which you need to check before applying to. Also, always fill up those forms in those VC website. They say they don't check it, but they have a team dedicated, which is actually looking at all those Google forms, all those website forms which you are filling up in those VC
yeah,
websites. And the other thing is always it is my criteria. Even though I get so many startups from email, from LinkedIn, from WhatsApp, there are a lot many founders who call me directly. I get so many deals from investment bankers, but I personally choose a deal whereby somebody has introduced me the founder, because I know this person has worked with the founder and has worked with the entrepreneur, and he knows the mindset of the founder, and he has certain relationship. So always go to a VC via somebody else,
yeah,
like the person who's close to that fund, like a reference.
yeah.
The one who are the venture partners or distributors or the sourcing team or somebody who knows the fund manager very well. So
Absolutely.
that reference is always very good and important to reach a VC. Rather than see a referral from a partner of mine who's based in Dubai, I will look at that venture because I am getting a good reference source, and that partner has worked with the startup, or a VC who's referring me a deal that okay, we are putting 200K, there is a remaining 250K left. Why don't you look at this? So that is the best reference which you can get.
Yeah, I completely agree on that. Yeah. Perfect. I think thank you so much, Rohit, for your insightful answers, and Kalp also for guiding the conversation so effectively. Thank you so much to all the participants also. I hope this session has sharpened your understanding of what investors truly look for. Uh,
Are we not taking the questions from the audience in the chat?
uh, okay, okay. We have some more questions, I think. Okay, okay. I think we have a lot of questions now. Uh,
Yeah.
okay, so let's like before wrapping up, let's quickly like have a Q&A with the audience also, so that audience is also satisfied. So I think let's choose one question. Okay, I have one question here. How early is too early for VC funding, Rohit? What do you have to say on that?
Can you repeat how early is too early for VC funding? Okay.
Yes,
Very
yes, that's
interesting.
a
Yeah,
very
I have
interesting question. Yeah.
very interesting.
Yeah,
Um, Sometimes if a startup is not able to achieve that particular trait whereby um, product is MVP stage and we don't know whether somebody will pay for that product or not, or we don't know whether there is a market that exists, because people talk about millions and billions and all that, but frankly speaking India market is small for certain particular sectors as compared to US, right? So assessing the right market, the right target time Samsung, and sometimes overpricing the valuation versus what stage you are. So these were the reasons sometimes VC say you're too early, because they don't know whether this market exists or not. They don't know whether you'll be able to scale that particular market, or whether you're able to bring that particular moat or not. So that is the time when VC say it's too early for us to assess. We don't know whether you'll be able to scale well or not.
okay. Okay, I think we have one more question. Okay, I'll quickly choose one. Okay, so Rohit, which sectors excites you, like going forward?
I think AI, of course, we are betting heavily on AI, especially enterprise AI,
Yeah,
infrastructure or application building for India. If you are infrastructure, then for the US market. So, of course, AI. Then deep tech, which includes, I think there's a question on deep tech also, somebody asked. So, deep tech, it could be hardcore AI infrastructure, or even cybersecurity, or even battery, semiconductor. These days, we are assessing one defense come deep tech company. So, and various technologies which can be used as a hardcore product. So, deep tech. And then the third thing we look at is sustainability, which is also a broader topic. It
yeah,
also includes manufacturing. It
yeah,
includes impact related, or in fact, sustainability AI. There's one company which I just told you about.
yeah.
So sustainable, even brands which are more sustainable. Even one real estate green farms we were assessing, which are using sustainable means to launch the real estate farms.
Okay,
So that is also, so B2B is more interesting to us. Yeah.
understood. Okay, okay. I think somebody is asking, what three traits do you absolutely require in a founding team?
Ah, nice. I think a hustler, as I said, should be more collaborative. Of
Yeah,
course, leadership. Of course, how much dedicated you are towards the goal. That is very important. For example, a founder who's coming and pitching us for funding, but is not sure whether he wants to leave his job or not. I mean, how are you able to come to an investor whereby you yourself are not confident in your venture? So that confidence, because if you want us to risk our capital, is a hard earned money of the investor. If the founder is not confident enough, then you can't expect investor to be confident on you. So that is, so you should have confidence on your own this thing. Sometimes you also have to check um the luck factor also plays a lot. The Am I audible, right? Or is it frozen? Okay. Yeah. So these are various traits. I would say leadership, quality, and apart from that, working with the team, availability, of course. Yeah.
Okay. And okay, so somebody is also asking, what is the most common error founders make while pitching?
Okay. While pitching, uh,
Yeah.
sometimes the founders say when I ask few question on numbers, they say I will call my finance guy and he will ask the those he will answer those questions. I mean, as a founder, if you don't know your own business numbers, I think that is very, very negative impression. Even though you have a CFO or founders conflicting each other in a pitch call, whereby they are saying, no, I will answer, no, I will answer. That creates a sense of discomfort, or I would say that founders themselves don't know where to compliment each other. So
Absolutely.
so that is sometimes during pitching, and sometimes they go too much deep dive into product. They're not talking about numbers, so they're not talking about the business model or the revenue model or the GTM. They're talking too much on the technology or the product or the case study or their awards or PR. We want to understand how much scalable is your business model and where do you want us to. Sometimes if I want to do like a 5 to 10 minute call, but no, he's like, I want to answer that part first, and then I will come and answer your question. So I was like, no, I want to directly know this question. I know what you're trying to build, and I want to get this answer, which helps us assess the opportunity very well. But then the founder, no, I want to pitch more. I want to make you understand the product first, and then I will answer your question. So that is
Yeah.
also sometimes a difficult pitch, I would say.
Okay. Perfect. I think,
Rita, even I have a question.
yeah, yeah, for
So,
sure.
there are very good founders, and the youth is watching this live right now. So, Rohit, what one should do to start a career in the venture capital industry, or to get a chance to work with Triple Eight VC and Rohit?
No, definitely. I myself started as an intern with a fund back in 2016. And that time, nobody knew about venture capital. There were very, very few angel networks of fund that time. Now we have almost 1500 to 1700 VC funds in India, AIF funds like us. So now there are so many funds, there's so many tier 2, tier 3 cities in which VC funds are coming in. So I think always knowing the founder through a resource or a reference, that will always help to land up a job. Other thing is what domain expertise you bring in, because sector agnostic funds are there, but if you're going in a deep tech or a focused fund, you need to know what are they looking to bet upon. So your research skills, what knowledge you possess, how much value you can bring into the fund. And sometimes referring a deal also gives a good opportunity for fund to assess. So, for example, if somebody wants to work, share me a startup which you find across and tell me why should I invest in that startup. So, in fact, there's something called fellowship which we do. You can join us for a 3 months to 6 months fellowship whereby you scout the deals for us. And if we like the deal, and if that startup gets funded, we may offer you a job.
Okay, so I think that's why what PitchMatter is doing with the Pitch Expo makes a lot of sense for the founders, investors, leaders, ecosystem enablers. because as rightly the people who don't know, PitchMatter is an investment hedging platform that kind of provides you a safety net for all your investments. And we are coming up with an expo in April 2026 in Dubai. And presently, we are doing our road shows, and the next road show is happening in Udaipur on the 9th September at iStart Nest Incubator from 3 p.m. to 5 p.m. So hopefully, you guys who are in Rajasthan and around Udaipur, we would like to see you over there. Yeah, thank you so much, Ridha and Rohit, for today. I would now ask Ridha to take it ahead.
Thank you so much, Kalp.
Just
So thank you, Rohit, again.
yeah,
Yeah,
just a few lines I'll tell you about
yeah, yeah, sure.
as a fund. We are definitely looking for first time or student founders as well. There are questions. There is one question on lending and wealth fintech startup powered by AI. Of course, that could be an interest for us. In fact, we looked at one startup called Tap Invest, which was into fixed deposits and that kind of a platform. In fact, trading and those kind of platforms powered by AI is very important, is very good. Marketing budget for a startup. Personally, I feel marketing can be done with Jugaad in early stage. So if you can save money for any marketing spends, I've seen smart founders saving money for marketing and first figuring out the right product or the right product market fit. So depends which sector, which industry. Web3 evolve for banks. See, India market is not so crucial for Web3 as of now. So UAE, we have a presence in DIFC and Middle East. We have started a India fund, which is a $20 million category one AIF in India. And UAE, we have started a DIFC presence. We also have a Delaware. So we also help Indian startups to go to UAE and US market. So if you're building in Web3 for banks, happy to help you with the UAE and Abu Dhabi market. Most common challenges the startups face, I think, as I said, overvaluation or overpricing or over market dynamics, or I would say personally, hiring is the most crucial phase as a startup which we need to learn. So I think we need to learn to hiring phase whereby using tools and AI and other fields whereby how we can increase the efficiency of hiring. And instead of going for cheap talent, if you find a better talent and which is more experienced, I would always recommend that. Um, Startup ecosystem and advisor or mentor. We have actually launched a great platform for mentorship. So if you are an investor, advisor, or mentor and you want to work with us, please go and register yourself at growit.club, which is actually built by Maxtron and Ridha team as well. So investing in startups that are still in ideation stage, fully product evaluate potential risk and opportunity. Depends what sector, what industry. Again, would love to understand what you are building and what return. But sometimes return and traction is a secondary thing. We want to assess whether this problem exists and whether you are able to scale and able to solve that problem and you can get customers paying. Your first customer is actually your first investor. So I would say if you can, and the risk, of course, we all understand startup investing is a risky class. So we know that part, and we've been doing this. So I wanted to answer a few questions from the audience, so that we are able to address some of the questions from the audience. I think we were able to answer most of them. So, and I also gave a good. There are startups which are approaching for investment opportunity here as well. I would say I can write down my email ID, rohit at 888vc.co. That is the best way to reach out to us for any investments at 888vc.co and rohit at 888vc.co if you are a startup looking for funding. Yeah. And as I said, you can go and fill up the form on our website on our page. And if you have a reference who knows me directly, that is always better to approach me. Yeah.
So Rohit, we missed a question where someone is asking that if you can name a few startups where Triple Eight has invested for the people to learn a more or a bit about that.
Of course. So I spoke about eco ratings, which was into sustaining AI. We have done business on bot. which is a AI based personalization app for D2C brands. Then we have done GetCrest, which is inventory automation AI for D2C brands to improve the efficiency of the inventory automation. Recently, we invested in a manufacturing granules company for anti biodegradable plastic called Uki. That's our first deal from our fund. We recently became a fund. Last 2 year we were doing syndicates. Now this year we are a category one AIF fund. So of course, and AI we are doing something called Aura AI, which is like AI for hotels and hospitality industry. So these are some of our portfolios. DataZip is one company which is into data training and uh, then personally I would have done more than 50 odd investments like Zip Electric, PSafe, Goat Brand Labs, couple of these startups. Yeah.
Perfect. I think that was an awesome session. So before ending up, I would like to say a few lines about Maxtron. So basically, as Rohit also told us that Triple Eight and Grow It is also like made by built by Maxtron. So we are basically committed to bringing you more conversations that spark ideas and actions. And a big thank you to our wonderful speaker and moderator, and to all of you who has actually joined our session today. We look forward to seeing you to our next session also. Thank you so much, everybody, for joining in.
I think great. I think very wonderful and interesting questions. You can reach out to me on email or LinkedIn. Happy to interact with any founders. I'm in Bangalore and Dubai, so would love to connect if you are around. Yeah.
Thank you, Ridha. Thank you, Rohit. And thank you, everyone who has joined us on this live, and much appreciate the questions. And we look forward to receiving more such queries and answering more such queries with some eminent speakers over the course of the webinar series. Thank you, everyone.
Thank you so much, guys.
Thank you. Thank you,
See you in the
everyone.
next session, everybody. Thanks. Bye.